You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, the program where the name pretty much says it all. Going to break down the week that was, indeed still is, on the futures options side of the fence. That could come anywhere. Maybe it's going to be dairy or lean hogs or metals or energy or equities. You never know. You got to tune in every week to find out. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, the Options Insider Radio Network. If you agree, if you think it's exciting, leave a review on the platform of choice wherever you're listening to it to keep the new folks discovering this network, especially in these troubled times. It's probably more important than ever, so we appreciate all of you who have done so. Keep those reviews coming to keep those new folks. We love seeing all the new earlobes joining us week after week. Let's keep that flow going. And, of course, keep those questions coming. We do love to hear from you guys. And joining me once again on the old TWIFO program, again, holding down the FTSE Russell hot seat yet again this week, our old friend, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Mr. Smith, welcome back to TWIFO. Yet another crazy week here in these quarantine times, sir.
Hey, Mark, thanks for having me on the show. It's great to be back. It's going to be a fantastic show, and I'm very excited. You know, it's Recon week, so we've got a lot going on at FTSE Russell, so we're very excited this week.
It is Recon week. Let's get to it. Before we do that, though, Sean, you know where we have to begin our voyage, our odyssey through the world of futures options. We got to look at what's moving and what is shaking this week. Once again, sir, I put the question to you. Where should we begin our journey, to the light side or to the dark side?
I got to go light side, my friend, as I always do.
You are the Obi-Wan to my Darth Vader here on this program. I'm just waiting for the Lucasfilm folks to call us up and be like, no. Let's kick it off to the light side here. Top 5 here. These are, of course, the products that are moving and shaking over the past week, since our last show, so from last show till now, usually this weekend when we're looking at those numbers, listeners, those reports are from Monday till now. This takes into account the entirety of the past week here. Someone mentioned, why don't you include crypto in these rundowns? I'm looking here right now. We did. I just reran the reports. So for those of you who were asking, I forgot the name of you out there, but our producer will have to find it, saying this Bitcoin makes this entire chart irrelevant. We just reran it with Bitcoin, and Bitcoin is only off a paltry 1.01% from last week. So it wouldn't even be in the top 10 of the bottom movers out there. So adding Bitcoin to this chart changes absolutely nothing. So just for all of you out there who were demanding to see crypto in your... By the way, if you love crypto, we appreciate that. Check out our Crypto Rundown program. We talk all about that stuff and a lot more. But let's go to the light side right now. Number 5 on our top 5 movers and shakers, silver, up 1.95% this week. Number 4, rough rice. Rough rice has had a rough couple of weeks up here. It's moving a lot. This week, moving to the upside up here, up a 2.25%, almost 2.24%. By the way, before you ask, hey, can you break down rough rice this week? We checked before showtime. It did a whopping 2 contracts this week. So unfortunately, not a lot of options narratives to parse there. Number 3, gold. So some metals in the top 5 here this week. Gold, 2.35%. Not exactly surprising. We're seeing the worm turn maybe a little bit in the broad equity space, and that always spooks some people that have a little bit of flight to quality out there. Gold, 2.35% to the upside. Number 2 to the upside, oats, up 3.66%. If you're wondering, oats sounds familiar. Yeah, it should, because it was our number 1 loser over the course of the past few weeks out here. It was number 1. Yeah, it was number 1 loser last week. And yet this week, gaining this week out here pretty strong. Yet, before you ask, there yet again, oats, as of showtime, 20 contracts on the tape this week. So unfortunately, not a lot of options narratives to parse there. And then number 1, yet again this week, 2 weeks in a row, lumber. Lumber up 9.73%. Oats was up 3.66%, by the way. So that's number 1, 2 weeks in a row for lumber. And again, before you ask there, 92 contracts for lumber out there. So a lot of things moving and shaking in CME land. Unfortunately, not a ton out there that are lighting up the options tape. All right, let's go to the dark side now, Sean. You may not like to hear this, but your seat you're sitting in right now, the Russell 2000, is actually beyond our top 5. You got to go all the way out the top 10 to the downside, which I guess is a good thing. You don't want to really be in the top 5 of the losers of the week. Russell 2000 coming into showtime was off 2.07%. That puts it at a firm number 10 to the downside. But let's gap up to our top 5 here. A lot of energy in the top 5 to the dark side this week. Number 5, heating oil, off 4.01%. That one, a little bit of an option story out there. 1,584 contracts to be precise. So compared to some of these others with 20 or 0, that's a lot, but not exactly a ton. Number 4, iron ore, off 4.14%. Last week, it was number 3. It was off 3.86%. And also this week, yet again, 0 contracts from an options perspective for iron ore. So unfortunately, we won't be parsing that one today either. Number 3, corn. One of the few in our top 10 this week that actually does some paper. Corn off 5.14%. Numero dos here, RBOB, off 5.36%. And again, before you ask, 934 contracts as of the start of the show. So again, if it doesn't even do 1,000 contracts, it's kind of hard to parse it. Maybe we could make an argument for heating oil at 1,500, but that's getting pretty dubious. And then number 1 is nat gas. Nat gas had a pretty crazy couple of weeks. It was number 2 to the dark side last week, down 10.9%, off 11.5% this week as well. So a lot to parse. But Sean, you mentioned at the top of the show, we got to kick it off there with our number 10 to the dark side. A, because it actually trades a little bit. And then B, because I know this has been your focus for the better part of the last couple of weeks. And now it is coming into stark relief, sir, because it is effectively upon us. We are there. Russell Recon coming up on us tomorrow, sir. Catch us up. What's the latest on this, the busiest week of your calendar year, sir?
You know, it's the culmination tomorrow of the total U.S. equity market capitalization as is reflected in our Russell 3000, right? It's an incredible time, and tomorrow we're expecting a very busy close. And I just mean that in terms of volume, not in terms of transactions, because our our partner exchanges, NASDAQ with the closing cross and the closing auction over at NYSE, have really made this a seamless transaction. But it's a fantastic close. It's record volume, approximately $31 trillion of market cap was measured on May 8th, our rank day. Slight, less than 1% decline from last year in terms of market cap. But some interesting pieces of information is technology does dominate the Russell 3000 index this year, with the top 5 stocks all being technology. The top 3 are all at a market cap of over $1 trillion apiece, those being Microsoft, Apple, and Amazon. To make up the total 5 at the top, it's Alphabet and Facebook following them. Some additions to the suite of the Russell 3000 are Zoom, Pinterest, and Mimecast, all technology companies, which is really interesting. 6 IPOs will enter the Russell 3000 as well. They're all healthcare stocks, which is interesting with the coronavirus being front and center of so much of what is talked about in terms of our continuous market volatility. So it's really interesting times. June 26th, tomorrow, is the culmination of this reconstitution of our indexes, and we're very, very excited. And as you know, on the open on June 29th, the equity markets will open with our newly reconstituted Russell indexes. All exciting times for us at FTSE Russell.
Yeah, the market's kind of reacting to here. We talked last week with Rick Rosenthal over there in CME. He was highlighting some of the things going on the RUT contract over there. Open interest was at 566,000 when he was coming out the show last week. That was the highest since December. A lot of that coming off the tape here this week, but still obviously a lot of trading going on into this recon out there. You kind of highlighted some of the changes out there. Yeah, it's a lot of moving and shaking. We've talked about recon before, but again, I can't remember the last time it's held this much fascination for so many people, because the markets are so different now than they were just even a year ago. 143 projected additions, 205 projected deletions for the Russell indices out there, the Russell 3000 collectively out there. You mentioned it before, the equity market cap overall down 1%, which is kind of interesting given what we've seen in the last couple of months out here. Yet the market cap of the 10 largest, this gets to what we were saying before on the option block with how the handful of names, the FANG M, some folks like to call them, are really just dominating the market cap. They're taking over the S&P, and they're a huge part. Their market cap is market cap of the top 10 largest U.S. stocks is up more than 23% compared to this time last year. So this does kind of that narrative you were saying earlier, Sean, the big getting bigger, the small getting smaller out there. The break point, which separates the large caps from the small caps, that dropped 16%. So the small caps got hit, and the large caps got big. The smallest U.S. company on your list that fell below $100 million for the first time since 2009. Of course, that was on the heels of the massive Great Recession out there. So some crazy times out here for all things RECON and Russell 3000, 2000, 1000, however you want to parse it out here. Let's see what people are parsing on the options front this week. We talked before, Sean, that seems like the narrative is longer term, far out of the money puts for whatever reason in these E-mini Russell 2000 over there on CME. By the way, you guys, as always, can play along with the home game. You can listen live to the show, of course, but you can always generate the reports throughout the week, cmegroup.com/TWIFO. If for some reason that doesn't work, try TWIO, TWIO, This Week in Options. For some reason, they go back and forth with that URL. But one of those should work, and you should be able to generate the reports throughout the week. So if you want to check on Fluid Milk at 3 a.m., have at it. No one's going to judge you here. Well, maybe Sean might, but I won't. I'm a pretty nice guy here. Coming into Showtime, Russell 2000 at 1385, on almost a half. It's off about 1.2% for the week. The vol it's kind of a mixed bag, actually. In their term in the weeklies, which is more gamma than vol, but that's an old conversation we've had many times, it is kind of off. Longer term, the vol is off a bit as well. So I guess it's kind of a bit of a capitulation period over here from an overall broad small cap vol. In fact, coming into Showtime, we saw our old friend, the VIX was at 34.25. It's up a point. I think it's given up some of that now. RVX was at 45.25. That actually puts it down 2.25 points from last year. That shows how just inflated small cap vol has been of late, because outside from this week, which I think is kind of keeping the powder dry week heading into Recon, aside from this week, the Russell 2000 has been in the top 5 to the upside or the top 5 to the downside pretty much every week for the better part of the last few months out here. So it's been very volatile of late. And it's meriting about a 45 vol out there, which is pretty frothy. That puts the VVIX, which is the volatility of volatility, at about 134, almost 135. That's actually down about 3 points from last week as well, but still very volatile. So vol is volatile, listeners. I know that's a kind of a somewhat counterintuitive concept to wrap your heads around, but volatility itself is volatile right now. And that spread, it reflects that. The VIX RVX spread is tighter. It's about at an 11. That puts it about 3.25 points tighter than last week. Remember last week we were talking to Rick about 14.25. That's kind of insane town for that spread. It has tightened up a little bit. So, Sean, anything light up your tape over here from an overall small cap vol perspective this week, as we're seeing small cap vol still frothy going into a Recon, also seeing that spread between the large cap, a.k.a. the S&P 500 vol, and the small cap, a.k.a. Russell 2000 vol, tightening up a little bit, but still very wide, Sean.
It ebbs and flows. We're off those highs of that incredibly wide market, as we talked about last week, and it was great having Rick Rosenthal on the program last week. But yeah, it's down. RVX, the small caps continue to just be a more volatile index, and they will continue to be as wide as the volatility product trades over the large caps. But we'll continue to watch it. It ebbs and flows as we talk about every week. Let's just compare notes in a week. Let's see. My thought is that depending on the market and the news, if things continue to steadily improve, even though you're hearing spikes of corona around the country in various regions, there's the regions that had the highest numbers earlier that are looking better. It all depends on the numbers, the reactions going forward. So let's just keep an eye on the spread. My guess is if there's no news and things just start to progress and improve, we'll see this get tighter, but it could also widen with increased volatility with things that happen all the time in these markets. So interesting times to continue.
Interesting times, the old Chinese curse. May you live in interesting times. We are certainly a falling victim to that one right now. Interesting times for our movers and shakers this week as well. I want to dive into a name we don't get a chance to talk about a lot. I had a listener of the show corner me once and try to get me to talk more about corn. He said, corn, if you look at the reports of how many active participants are in the market, corn is number one. Adamantly insisted that. Corn has the most quote-unquote users out there. If you look at the commitment of traders report. I haven't had a chance to verify that or not, but we're going to make him and everyone else who writes in for the Ags happy this week. Corn was our number 3 to the dark side here, off 5.14%. Coming into showtime right now on the This Week In report, so as of from Monday till now, effectively, it's still off about that much, about 4.8% right now, hovering about a 316.5 in that front contract going out in about a day out there right now. So that means net on the week, it's off about 15 handles or so. So not a great week for all things corn. It's giving the vol a little bit of a juice. It's ticking up, those nearer contracts ticking up. But again, those are pretty much mostly gamma at this point. Let's go a little bit farther out, because actually about 25, almost 26% of the paper this week was going up out there in that SEP contract. And let's look at the vol out there. The vol out there is actually showing a pretty strong spike to 47.5. I'm kind of wondering if that might be a little bit of an aberrant print. I don't think the vol is up 21 points this week. That would be pretty much almost doubling. I don't think that contract had that much of a change, but let's see. By the way, 554,000 contracts out there, so a little bit more active than, let's say, oats with 20 contracts out here this week. Let's go out to that SEP contract. Let's see what's going on. And it was pretty much in the money puts that were leading the dance out here this week. 320 puts. We're doing 21,000 contracts out here, 21,000 and change. So that's pretty much puts it up as the number one trade out here this week. Pretty much all of that opening. So a lot of folks opening on this track, which kind of makes sense as we're falling away from it, falling through it. Some folks would put on some protection out there. The big print was actually yesterday, about 6,000 going up there, most of that opening. 34, almost 3,500 today. Oh, actually, I take that back. 10,500 going up on Tuesday. good chunk of that opening as well. So a lot of opening 320 puts. Again, not surprising. This is in September, listeners. We're seeing a lot of action around that strike as we race to it and indeed break through it out here. I don't think that's enough to double the vol. I could be crazy. It would be a heck of a vol term structure out here if every other vol was in the 20s and then SEP was at 48. That would be pretty insane. Maybe you might want to trade that term structure a little bit if that was indeed the case. I'm going to go out on a limb and say that's probably an aberrant print here on my system. 330 calls also in that contract going out in a day. Also pretty active. 20,000, almost 21, about 20,200 of those. The lion's share of those going up on Monday, about 6,700 on Monday, 6,000 on Tuesday. A lot of back and forth on this strike. So 330s, again, we were kind of vacillating between 330 and 320 over the course of the past week. So makes some sense. Some folks will be coming in, maybe taking some of that off as well. So total about 20,200 going up there this week as well. Interesting stuff out here in oats. Let's go back to that SEP contract to see what the skew. Again, maybe some of this data might be a little funky, but let's see. Last week, the puts were registering 16.3% cheap to the at-the-money. This week, they're 4.6%. So the puts getting a heck of a bid. So that could maybe account for some of that, why that vol data is a little bit screwed. Not enough, I don't think, but some of it. So that's a pretty big bid for the puts. Again, that reflects all that love on that 320 strike, which is now in the call wing. Shows how the warm has turned over the past week. And then we've got the calls were 11.2% cheap last week. This week, 5.3% rich. So interesting movement in the calls. Let's just dive back in here really quickly to see what was trading and SEP in the calls. It was the 340 calls were the most active with about 12, almost 13,000. The lion's share coming on Tuesday, 6,300. And the 3/2 calls doing about 12,500. Also a lot of those on Tuesday, 5,300 there. So 340, 350, pretty far out of the money calls. But that was what was trading out there in September. Interesting stuff. Don't get a chance to parse a lot of corn here on the show. We get a lot of ags because they're not always in the movers and shakers. And when they are, it's stuff like oats that doesn't trade. So when the ags sneak into the top 10 or at least top 5 to the upside and to the downside, I like to parse them out there a little bit. But, Mr. Sean, I think you know where we have to hang our hats now next because it's the one everyone keeps asking about. It's the sticky stuff, the Texas tea. Do you concur, sir? Should we head out to WTI land next?
Let's definitely go there.
I'm waiting for the Russell 2000 index of energy names. What do you think, sir? Is that next up on your docket after Recon is done? Is that your next product development journey there, sir?
So good.
I know. I think it's a new index. I think the derivatives on it might trade a little bit, just given the indications of what we've seen out here, what's going on out there in WTI land. Of course, you guys can play along. As always, cmegroup.com/TWIFO. Then go to the drop down there for energy, select WTI, and you're off to the races. Once again, I like to choose select all, but it's up to you how you like to display your data. Select all can be a lot, especially in certain products like Eurodollars, for example. You hit select all, you're probably going to regret it in the Eurodollars. But in WTI, it's kind of informative. Some of the paper that goes on out there is a little bit farther out. Coming into showtime right now, we're seeing WTI, that front month, at about 38 3/4. That puts it off a little over a handle. It's about 2 2/3% to the dark side here for this week. The active contract out here is going out to August, where we have almost 41% of the paper going up out here in August. Let's see the vol out here in the AUG contract, 22.87. So closing in on 23. That's up about 2 points. So getting a little bit of juice back out here in the vol, which has been kind of light. It's been threatening the lower end of the 20 handle for a while out here right now. The skew coming into showtime, not a heck of a lot of change on the put side, at least. The puts were 8.3% rich to the at-the-money last week. Again, this shows comparative levels of the premium of the 25 delta put and the 25 delta call, listeners, to what the at-the-money vol is. So when I say it's 8.3% rich, it's 8.3% higher than the at-the-money vol on that 25 delta put. That's what we're talking about here. And the puts this week, 8.2% rich, so kind of unched, which is interesting. The calls, however, are a little bit more interesting. We've been saying for a while when we're going to see maybe a little bit of a narrative where the worm is turning on the call wing. 5.1% cheap last week. This week, 0.6. So they've come in about 4.5 points, getting bid up a little bit out there. So maybe there's finally some love for the calls out there. You could certainly have seen it over the last few weeks when we saw a bit of a rally out there in WTI. Some folks liking themselves some calls to the upside. But so this week, maybe that's an indication out there. Total, like I said, the big print out here was the 35 puts. So those are slightly out of the money puts doing 7,300 contracts. But actually, I take it back. The biggest print of the week was not in the SEP contract, where AUG contract, where most of the paper was. It was all the way out here in DEES. It was the DEES 50s going up 10,401 times. By the way, if you're wondering, WTI doing about 350,000 contracts so far this week. 10,401 of these DEES 50s. They traded pretty actively all week. The lion's share going up on Wednesday, 4,300, 2,300 today, 2,200 on Tuesday. So active week here for the DEES 50s. Also worth knowing the DEES 47s did about 6,100 on Tuesday as well. DEES 50s. That's interesting. That's not a strike I would have expected anytime soon. Maybe someone coming in for a bit of an upturn towards the end of the year. Maybe someone fading it pretty aggressively. This was mostly opening on the 50 strike out here. So opening paper either way to the far upside here. Not that far anymore. But 50 seems like such a distant strike when we were negative 40 not too long ago. But keep an eye on those. DEES 50s, worth noting. That's actually our number one with a bullet out here. Then we actually go to SEP, 35 puts doing about 8,900 for number two. Then we have to go back to our number 1 month, which is August, which had more paper net than the other two. But still, the biggest print in August was the 7,300 lot of the SEP 35 puts. They went up, again, throughout the week, most of that, about 3,000 going up on Wednesday. So 7,300 total, about 3,000 on Wednesday. And then followed there, kind of a tie by the 45 calls in SEP, or I should say in August, and doing the 6,700 contracts and 6,700 as well of the AUG 30 puts. So interesting stuff out here in crude oil land as well, listeners. Yeah, that's surprising. I'm going to put a to be watched and maybe to parse a little bit more on that longer term paper. If you're wondering, by the way, all the way out to DEES of 2022, someone trading about 1,600 of the DEES 2022, 65 calls. So if the 50 handle is not rich enough for your blood, 65 calls, DEES of 2022. What do you think about this longer-term DEES upside call paper in WTI, listeners? Are you on board with it? Are you fading it? You think they're fading? You think they're buying? Let us know what you guys think out there. They also have some listener requests for products as well, so I want to make sure we squeeze some of you guys on the show as well. So I think we'll get to some of your requests and some of your comments as well with a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your segment, the Futures Options Feedback segment. You know, Sean, days like this, and weeks like this, really, where we have the lion's share of our top 10 doesn't do a lot of options paper to the upside or to the downside here. We got three names, corn, gold, and silver, that really do any substantial options paper. The rest of them, not so much. I like to let the users kind of dictate where we go as well. But before we even get to that, we got a lot of people asking more recon questions, Sean. So hopefully you put your question answering pants on. Let's start with this one. Santa Trader. I like that. Is that maybe for the Santa rally we usually see out there? But either way, Santa Trader wants to know, what impact will the Russell Recon have on stocks that are deleted? Will they be cheaper? It's an interesting question here, Sean. I just mentioned the numbers here. Let me see if I could find them for us here again. How many names? 143 names being added, 205 names being deleted, Sean, here. So Santa Trader wants to know, for those 205 names that are getting the axe, what typically happens to those, Sean?
Santa Trader asks a great question. I'm going to take the other side of the transaction, and this probably will answer Santa's question. But, as a stock enters an index, there creates an additional demand for that stock, which is usually giving it that demand always gives it a support in terms of price, and it's usually bullish for a stock. When you remove a stock from an index, you kind of have the opposite of that. They lose that demand, but the stock then reverts back to its performance and the way equities are measured by those that are watching the markets and analyzing the stocks and their performance and their company's revenues, et cetera. And then the stocks will continue to trade on that performance rather than having the support of being part of an index where that support comes from the investor community investing in the components of that index that they're a component of, whether it be our Russell 1000 or Russell 2000. So those leaving one usually land in the Russell 2000, but then there's the deletions as well. So I hope that answers Santa Trader's question. Again, S. Smith at FTSE Russell, if you want to have a little more discussion on the topic. Happy to discuss it via email.
It makes sense when they're removed out of a large benchmark index like that a lot of names that used to benchmark to it and have to drive paper in it are no longer going to be doing so. So probably going to see volume drop off, at least in the near term. Maybe interesting to see longer term what the vol impact on that is. A little bit less liquidity may have some interesting effects on the overall vol perspective. Interesting question out there, Santa Trader. Let's go up here. Ninja. Straight up Ninja. He's a master of all things ninjutsu out here. Ninja wants to know, any hopes for some cheese or dairy on the show this week? Hashtag TWIFO. Well, I said before, you guys ask and you shall receive. If you want an esoteric product that's not in our movers and shakers to the upside or to the downside, as long as there's some option flow to it, we're happy to parse it for you. And yeah, dairy has been lighting it up of late. Not so much with the cheese, so Ninja, we checked for you. Cash settled cheese did a whopping 916 contracts out there this week. So not a ton to parse, but our old friend, frequent offender, Class 3 milk, lighting it up yet again. Coming into showtime, it had done about 13,500 contracts. As of a few minutes ago, it's done about 15,300, so a couple thousand more contracts almost piling in since we started the show. So it's been a pretty active week out here for Class 3 milk. By the way, if you're looking for it yourselves, playing the home game listeners, there's a drop down there going to agriculture, going to dairy. You're going to see two different Class 3 milks. You're going to see the DC and the DK contract. Go with DC. It does a little bit more paper, a lot more paper, actually. DK does about 400 contracts so far this week. So that's where we're hanging our hat out there this week. See, asking you shall receive. Class 3 milk at about 20, almost 21. It's 20.92 in that front contract, which is going out in about 5 days out here. The most paper, 38% of the roughly 15,300 contracts that have traded this week have come in this July contract out here. The vol out here is pretty much 32 and a quarter, so pretty volatile. We were just talking WTI, and it's about a 22. So 10 points more juice out here in Class 3 milks, up about a point this week as well. So we've been saying for a while, dairy's moving and shaking out here and seems to be holding up out here from a vol perspective as well. The skew in this contract, this has about 40 days to go, 39.92 days to be precise. So I feel pretty safe parsing the skew out here. The puts were 2.4% rich last week. This week, 4.3% cheap. So the puts coming in pretty firmly, even though Class 3 milk only off about 1% so far on this week. Again, that's from Monday till now. Let's see. The calls, 2.2% cheap. Last week, this week, 1.3% rich. So pretty interesting swings. The puts getting cheap, the calls getting bid out here, which, is kind of when you see a little bit of a downside move along the skew curve, you kind of expect that. This is maybe a little bit more extreme than you might expect out here. So interesting stuff. The biggest print out here of this 15,000 or so 500 contracts was the 20 puts here in July, going up about almost 700 times, 660 to be precise. They traded the biggest, about 300 of them going up on Monday. That was the most active day. 214 on Tuesday. The rest kind of scattered throughout the week. Good chunk of that opening. So opening 20 puts, maybe not surprising. We're getting close to that 20 handle there, 20 and change out there right now. Probably also accounting for some of what we're seeing out there in that put wing. Though, interestingly enough, those puts came in pretty aggressively. So maybe someone was crushing that 20 strike pretty actively out there. Either way, something came in and really took down that put wing pretty aggressively. Also worth noting, the 21 puts, which are now right around at the money, are about 500 contracts of those, and they did 171 on Tuesday and about 116 so far today. Interesting stuff out here. Let's go a little bit farther out to see what we can find out here. Any weird aberrant prints in Class 3 milk. Remember, we're at about a 20, almost 21. Looks like longer term, going out to June of next year, the 14 puts we're trading in June and in April of 14 puts across the board. And interesting, 14 strike across the board. April, May, and June all have 14 puts trading for 155 each. So I'm guessing some sort of funky calendar going up 155 times out here, or maybe a bit of a weird roll. Either way, someone liking the 14 strike in April, May, and June out there of next year. So there you go. There's a little bit of your glimpse into all things dairy out there, Ninja. Hope you like it. If you guys have a product you'd like to see discussed on the show, as long as it's got some flow to it, we're happy to make your TWIFO dreams come true here. Next up, we got frequent questioner from Options. This Options Game, he listens, tunes in every week. He wrote in about the SEP 10-year. He said the 138.5 and 139 straddles had the same price for the SEP 10-year. How is that possible, he wants to know. Let's pull up the 10-year for ourselves this evening. We don't get a chance to talk 10-year too often here on the show as well, because it's not exactly a name that's top of mind for most of you out there. It does decent paper, though. As of right now, 1.25 million, actually taking all the months, 1.36 million contracts up here. So a lot of paper going up out here. You see a lot of people writing in asking about 10-year very often, nor is it on our movers and shakers list very often. So don't get a chance to parse it too often. Since you asked, we shall do so. As of right now, 138.275 on that front future going out in about a day. Let's see. The most action was in that contract, also going out about a day. So kind of hard to parse the skew out there. We got to go all the way out to AUG of this year to get another month with decent paper. About 34% of the volume, 34.5% coming in the AUG contract out there. And the skew a little bit different out there. 0.8% rich to the at the money last week. This week, 6.6%. So the skew moving out here. The calls, 0.5% bid. This week, 2.2% offered. So interesting changes in the skew, even though the vol out here, and again, we're talking, another reason why we don't talk about it too much, listeners, talking about a 3 handle in the vol out here. We were talking about 42 in Class 3 milk, 22 in WTI. You're talking 60, 70, get the products like Bitcoin and stuff, and you got a 3.5 here in the 10-year. Another reason why maybe it isn't the sexiest of products out there from an options trading perspective, even though it does a lot of flow out here. So he wants to know why the 138.5 and 139 straddles in September have effectively the same cost, same price. And that doesn't really surprise me, Options Game, for a couple of reasons. First off, like I said, the vol here is anemic. So the amount of premium, quote unquote, you're going to get on these contracts is pretty nominal. And then B, you're picking 2 strikes that are very close together. They're a half a handle apart. So it would surprise me, quite frankly, if it was the other way around. If there was a huge differential between the 139 straddle and the 138, that would show me something weird was afoot out there. Something crazy, some crazy paper had traded. The skew was wonky. The fact that the 138.5 and 139 straddles are pretty much the same price, given this level of vol and what we're seeing out here, doesn't really surprise me at all. He followed up and says the vol is lower. The vol level, the price is the same. The vol is lower for the 139. I'm tempting to buy one and sell the other. It's not a... You say lower, I think everything's relative out here, Options Game, because you're talking a 3.5 versus a 3.75. These are not huge discrepancies to really take advantage of out here. But if you are so inclined, you want to do a straddle swap in the same month, a half a handle apart. So you're effectively buying one straddle, listeners, and selling the other, a half a handle apart in the same month. If you are so inclined, have at it. I think, Sean, that sounds like more of a love your broker trade, though. Wouldn't you concur? Where someone really just wants to generate a lot of commissions for their broker, Sean. I'm following you. I'm following you every step of the way here, Mark. But yeah, doing a straddle swap, a half a handle apart in a name that has a 3.75 vol doesn't sound like it's the juiciest of trading opportunities. But hey, if you're so inclined, and you want to have at it, we won't judge you there, Olive Game. Hopefully, or Options Game, I should say. Let us know how it works out for you out here. I am 67 says, thanks for highlighting the correlation tool on TWIFO. I've been playing with it after the episode, and it's proven to be very insightful. I've even found a few surprises. Well, there you go. You're welcome, I am 67, everyone else who has enjoyed it. Yeah, it's an interesting tool. It does kind of find some surprise. I'd be curious to know what the surprises were that you found. We highlighted some on the show last week. Maybe there's something you came across that we didn't discuss, in which case I'd be happy to hear it from you. It's an interesting tool. It probably should get a lot more play because people are always talking about diversification and correlation and how different asset classes perform in different scenarios. There's a tool that breaks it all down for you in very clear, very stark terms. I did mention I wanted to do a breakdown of the cross-asset correlation in the height of the madness back in mid-March of this year. I didn't get a chance to do that this week. Maybe I'll do it for next show. Because the old adage is correlation goes to 1 when it all hits the fan, right? So I'd be curious to see how well that adage holds up. I got a feeling, just seeing what we saw anecdotally, pretty darn well. But good comment there, IM67. Let us know what the surprises were that you found, and we'll highlight it there for you. Ruben H. Oh, he's the guy who was chiming in before the show. He was asking us in our movers and shakers chart, which we send out so people can see what we're going to talk about every week. He wanted to know where the heck is the Bitcoin, and he said not including Bitcoin on that chart makes the chart irrelevant. And, maybe if we were back in March, I might agree with you, Ruben, because that's when it was moving 30% intraday and huge swings. And so, yeah, Bitcoin would have been dominating the chart by a large milestone out there, by a massive factor back in March. This week, not so much. We reran the numbers, and you're right. The default scan includes all the benchmark products, but for whatever reason, crypto is not included in there. So we did, because you asked so nicely, we reran the scan, including the benchmarks and crypto. And if you do that, it's not even in the top 10 of downside movers out there. It's off 1.01%. It's tied with a few other products out there. Ruben H. out there. So, yeah, let's see. What was it tied with? It's pretty much tied with soybeans, and it's less than soybean oil, which is off 1.68%. So I'm with you that Bitcoin should be included in that scan. Maybe we'll have to play with our default settings a little bit. But I disagree that it makes the chart irrelevant because Bitcoin isn't really a factor here this week. I get it. You're a crypto lover. Check out our Crypto Rundown show. The hardcores out there really, if you don't see crypto involved, they're not happy about it. He says Bitcoin is an essential metric, the same as happened to gold a couple of years back. I'm not sure what he's talking about there. But yeah, Bitcoin, interesting one. Unfortunately, not a mover and shaker so much this week. All right, let's wrap it up here with this one from Scott. Scott Somer, frequent question asker. He wants to know, can you compare and contrast two upcoming futures exchanges? He included demand derivatives and the small exchange. Yeah, the demand derivatives guys, we know those guys fairly well. They were on our network. They were our early sponsors on our Volatility Views program. They helped us launch that program, quite frankly. That's Bob Kraus and our old buddy, Mr. Don Schleschel. All those guys have realized volatility fame / infamy / Volex. They're back with this demand derivative. So if you've thought to yourself, I would like a vol product that maybe is outside of the implied realm. So we're always talking about VIX and RVX, which are in the implied realm, aka what the options prices are pricing in from an options volatility perspective. Realized volatility is very different. It's what the actual market has exhibited. So when we show you our movers and shakers for the week, that's actual movements that have occurred in the market, and that equates to a certain level of volatility. And that's what they're offering there. You should check out, if you're interested there, Scott, and I'm guessing you probably did if you're writing this in, but those of you who maybe he didn't, we had a great chat with those guys on our interview show a few weeks back. You can find that on our network, breaking down all the things that they're doing out there. They're in the middle of a fundraising campaign, actually, and you guys can participate. It's a crowdfunding. So if you're interested in realized volatility, head on over to Demand Derivatives. Search for them on Twitter to search for Demand Derivatives. You get to their site. They'll have a link to their crowdfunding campaign. It's actually they're trying to open the doors to more players than just the large institutional investors who want to buy a piece of an exchange. So you guys can go out there, if you are so inclined, if you are so interested, and actually buy a piece of the demand derivatives for the realized volatility. They're going to have more than just realized vol products. They're going to have all sorts of interesting things going on over there. So I encourage you to check it out. But that's a very different beast than what the small exchange is doing. They're trying to bring futures into bite-sized for the retail. As we've seen with CME, micro futures are a huge hit, a huge success. So it makes sense that some might want to get into that game and try to offer those. They offer, looks like a small stock 75. They're terming it a small U.S. dollar, a small precious metals contract, a small 10-year U.S. Treasury, and a small what they term global oil. I don't know if that's Brent. I don't know if that's some sort of hybrid of Brent and W. I'm not sure what it is, but global oil. That's coming soon. That is not listed yet. So right now it's just a small stocks, which is kind of like a mini S&P apparently, but 75 of those. Small U.S. dollar and small precious metals, what you can trade right now. They're very new. They're kind of just out of the gate as well. So it's kind of hard to compare and contrast one that hasn't launched yet with one that just barely launched. It's brand new. So it's kind of give them a little bit of time to get their legs under them, get some of these new products listed. I think the users are a little bit different too. The demand derivatives is going at a much more sophisticated institutional type clientele, whereas the small exchanges, it's in the name. They're going after the small retail traders. So I think we'll just give each of these a little bit of time, but they are two very different additions to the space out there. And I'd be curious to see if they generate some traction in the near future. I want to keep an eye on them, Scott. Maybe we'll come back in a few months when the small exchange has had some time to get some volume underneath its legs, and also maybe time for the demand guys to get their crowdfunding campaign done and maybe hopefully get something on the books for a launch, and then we can sink our teeth into them a little bit more. All right. That music, listeners, means we've come to the end of another epic journey through the world of all things TWIFO. Glad to have your product requests here on the show. We'd love to hear from you guys. We like doing movers and shakers. We like breaking down what's moving in the market as well. But as you see, oftentimes, there's a lot of weird names there that aren't exactly options players. So if you have your own requests, send them in. Chances are they might make it onto the program every week, along with some of the stalwarts you guys always want, like your WTIs and some others out there. But before we go, Sean, you mentioned at the top of the show, we had some listener questions about it. We are on the cusp, on the verge of the big day, sir, the RECON. If folks want to know more, maybe they have some last-minute questions heading into this big, tumultuous event, sir, where should they go? What should they do?
Mark, thanks for having me on the show again. It's great to be here. You know, tomorrow at the close is going to be a very exciting close, and as you know, there's going to be real high volume in the market as, you know, $9 trillion of investor assets get rebalanced. Over $100 billion traded at the close last year, and this year we're anticipating we will see record volumes as well. But as you know, it's an orderly event. The exchanges, our partner exchanges, New York Stock Exchange and NASDAQ, with the closing cross, do a fantastic job of having very smooth operations. And with our extended communication into the markets for the last few weeks in regards to this reconstitution, we're expecting a very smooth process and exciting volume hit at the close of tomorrow. So we're looking forward to that. But again, any questions, please reach out to me, smith@FTSERussell.com, and go to our website, FTSERussell.com. There's lots of information regarding these indices that you can go to in regards to reconstitution. Also, CME Group and SIBO have put out some fantastic information about using derivatives around reconstitution as well. So there's some fantastic information out there. Please go to our website, go to our partners, CME Group and SIBO, for more of that information. And you can always reach out to me with any of your questions. Thanks, Mark.
You're welcome. And, you know, Sean, you mentioned a couple of times now you had that big webinar. So folks head over to FTSERussell.com. Are those links up there for them as well? I'd imagine more than a few folks may want to tune into a webinar right now to catch up ahead of the big event, sir.
There was one today. I mentioned it earlier in the show.
There you go.
So
See?
Definitely go to our website for recording. And Mark, I'll send you a link so that you can share that broadcast with everyone as well.
Yeah, I think that's great. I love to have the webinars. You always like to see that the archives are available. Sometimes webinars are just one-off, one time, and they're done. Obviously, we here on the network prefer on-demand audio that lives forever, or at least in our case, 13-plus years. So glad to see that they're still up. Head on over there, FTSERussell.com, FTSERussell.com to learn more. And, of course, head on over CMEGroup.com to check out the cross-correlation tool, the TWIFO reports, all the other cool stuff we have cooking over there, maybe the FedWatch tool, a lot of interesting things cooking over there. So you can generate your own reports. You're not listening to this fine program. On behalf of Sean and our friends over there at CME Group, and indeed myself, Thank all of you for downloading, streaming, subscribing. Remember, a lot of great stuff hitting you. Even today on the network, we got, of course, TWIFO in the can. We've got Option Block in the can hitting you any moment now. We got OPR that was recorded earlier today, one day later than usual out there, so you're going to get OPR there today as well. So a lot of great stuff coming to you on the podcast side. And then stay tuned. Tomorrow we'll be back again, 1 p.m. Central, 2 p.m. Eastern. Talk a little bit of vol out there on Volatility Views. Spoiler alert, there's a lot of it. So we'll be talking about quite a few things. A few products went the way of the dodo this week, so I got a feeling we'll be talking about that as well. Join us back there tomorrow, Friday, 1 p.m. Central, 2 p.m. Eastern. That kicks off again on Monday. We got Option Block, Crypto Rundown. All you guys asking us about Bitcoin, where is it in the charts? Crypto Rundown is the show for you. And we've got Boot Camp and everything else, OPR, all the way back to Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.